Hey, people. Hello. Right, it's the 16th of September 2025, and here is some market updates. So, first and foremost, on the 17th of September, the the interest rate so the Fed is meant to or supposed to announce the cuts in interest rates, and let's just see what it says. What have we got here? Okay, according to the Fed Watch tool, they will be cutting by about, I think, sorry, yeah, target rate is about four. Let me just make this red. Target rate is about 400 to 425 basis points. I've always thought they cut in 0.25 increments really. So, we're looking at 500 basis points. Oh, sorry, 50 basis points. But we shall see. But I think also somebody asked me, will they cut or will they not cut? I mean, it's looking like based on the way they voted. So I think, like I said again, target rate is 425 to 450 basis points, and about 96% seem to have voted in, yeah, for a cut, full stop. So I was, it's quite funny because I did the first video and it's I did the first video and it's just all disappeared. So I'm just doing it again now. So let's get rid of this drawing. Sorry. So I shall repeat the video again. It wasn't very clear. Okay. So as I was saying or earlier, they are expected to cut rates by 50 basis points tomorrow. There's a rumor that it might just be 25 basis points, but we shall see regardless. Okay. So a few things first. I think how are assets reacting based on the cuts? So first thing I wanted to look at is the I want us to look at oil. So if you look at crude oil, let's just type crude oil. Okay, so oil has actually been on a apart from the persistent high that we had in 2022 and then 2023. I think oil has actually been on a persistent downturn, really, multi-year downturn without having to hit the peak of previous years, apart from a random spike that happened earlier this year. I think this was when, Iran and Israel had the 10-day war, which, President Trump decided to call it. That's number one. But again, also, oil has actually been gently rallying um, of recent anyway, with a very, very strong lows that's been forming right there. I think a few things we can see, there's actually been, of course, there's a risk from OPEC. So, which one of the things that could push oil. Another one is the geopolitical risk. Israel, Iran, the entire Middle East have not exactly settled. So this is one of the things that's pushing oil prices. Um, you know, Also there's seasonal demand. I think this is Q3 now, the end of this month. Once we move into October, we hit Q4, and once we hit Q4, oil tends to have that gradual general demand. There's a heating season, holiday travel, and industrial restocking. So this is one of the things that pushes oil prices up. And of course, we've got macro tailwind. Um, so if the Fed signals easing, then of course there's going to be a weaker USD commodities, which is priced in dollars, like crude oil. They could all get a lift as well. So this is some of the things that's been pushing oil prices up. So yeah, looking at it on the local basis, oil's actually been getting the lifts, and so tomorrow is actually quite pivotal in things that could happen. I mean, a few other things as well. The Federal Reserve, of course, they expected to cut. There's been a few people who are saying they might cut at 25 basis points. Under huge pressure from the Trump administration, the market believes the softer economic data and specifically weak jobs number mean a cut is a done deal. Really, I think majority of people expect a cut But of course, it all depends on the Fed Powell's tone. Does it sound, is it going to sound dovish? Is it going to sound hawkish overall? And I think two is expected more this year. There's actually been never been a year where they've actually cut rates just once. So that's another thing there. Then inflation has peaked due to tariffs, economic activity, and employment is slowing down. There's been quite a disappointment on that side. So there's been risk which is skewed to the downside. So Thursday's employment claims rose to the highest in nearly 4 years, which is last year's employment claims. I think that was the highest since 2021, and the situation looks rather fragile. So the question is whether the market is too complacent about the Fed's dovish plots, a dovish pivot. And true, the labor market has worsened sharply as well, as seen by the recent non-farm payroll reports. But it's either, so it should be noted that the June summary of economic projections showed policymakers expect an easing in employment conditions. And I reiterates that falling labor supply means payrolls don't need to be created as quickly as before for the Fed to fulfill its mandate. Moreover, inflation has picked up some more, and with the August CPI print rising to 2.9% from 2.7, moving further away from the Fed's target, and faced with unrelenting assaults on his person by Trump, Chair Powell may just be inclined to stand put. But that's less likely to happen right now, really. I think there's a general belief that, Fed are quite slow to react, and a lot of times they tend to be too late. But all that said, it seems that this meeting is a pivotal moment of the year, and when the employment side of the Fed's dual mandate takes priority over the inflation side. Yes, payrolls don't need to run so hot as before, but the unemployment rate has risen to 4.3%, which is the highest since October 2021. So cooling that Powell noted in his Jackson Hole speech was unmistakable. I think he did say that as well. So assuming the Fed does cut, markets will pay close attention to the updated statement. And of course, the press conference, with Powell to see whether this is the first of several cuts, 3 cuts, 25 basis points a price, or if the guidance is more guarded around inflation risk. So it's likely that the statement will reassess that the extent and timing of further policy adjustment will be dependent on incoming data. So, like Powell always says, we are data dependent. Again, the next one is, let's look at gold, actually. So since looking at crude oil, also gold has actually been making a run, and this has been non-stop at all since 2023. So this has been on a 2-year run, really. Is this what I'm going to be doing right now? Would I be buying more gold, or would I be investing in gold? I think at this moment you've got to watch, really. People say it's gone high, but look, highs can get higher, or it's gone low, lows can get lower. But it all depends on tomorrow, regardless of what will happen. I think what happens is we need to have a plan. But gold is where people tend to park their money when there's a risk. And like I said to the guys in our community, I think gold is telling us something. If you look at silver, also, silver has been telling us something. That was a late mover, but look, silver has actually been on a 14-year high as well. So we can see that silver has actually been right here since September 11th, 7th of September 2011. So that's been on a 14-year high, and that's actually been running into Wednesday's announcement. So that's another one. But also, if you look at, so these are, the safety places where people tend to run to, really. I'm not sure if I'm going to call Bitcoin a safety instrument, but then again, it has actually outperformed a majority of indices and equities. So yes, I think in some people's book, it is a safety asset where they run to as well. Again, Bitcoin has actually been, hitting almost a resistance into the day. So we shall see how Bitcoin will also behave. Like I said again, all of them are telling us something. They're all peaking and perching and telling us, look, there's a run to be made here, and we're not stopping because inflation is at risk. So regardless of what happens tomorrow, all these safety assets are telling us something. And I think many people tend to take positions into these things, but you've got to be patient and just wait. Let the decision happen before you make your move. One more thing I was going to look into. I mean, I'm just going to look into some of the Magnificent Seven. So if you look at it and see how they are behaving, Magnificent Seven, Nvidia said something. Look, Nvidia today was actually it was actually red. Okay, let's look at Microsoft. Microsoft also was red going into tomorrow. So looking at six, sorry, there's a Magnificent Seven. Two of them that I've actually looked at has been red. Let's look at Apple. How is Apple behaving? Okay, Apple's actually been slightly green. Okay, I think also Tesla, which has actually been a huge underperformer all year round, but Tesla has actually been making a run the past few days, and this is of course all because of the CEO Elon Musk buyback. I think was $1 billion massive buyback, showing interest and belief in Tesla. So we looked at four of the Magnificent Seven. Two of them have been bearish, two of them have been bullish. I think there's Netflix as well, actually. So again, I mean, I've just looked at five of the Magnificent Seven, and three of them, or three of the five, are red going into this thing. One of the other thing, or most important thing to say is, oh, let me look at Amazon. Okay, so 3-3. So Amazon has been green into it, but one thing to pay attention to is that going into, and then of course if we look into all the key indices, well, some of the key indices. So if you look here, the So the Vanguard S&P 500, that's inching all-time high, and this has been a persistent all-time high bet consistently. This year has been, it's been nothing short of amazing, really. And if you look at the SPY as well, the SPY, again, literally everything's been hitting all-time high. I mean, quite similar, really, they're both S&P. But um, actually, let me look at the Nasdaq, the US 100. Yeah, Nasdaq has also been, been on a, it's been on a magnificent run. So overall, it's been a very bullish year, and everything has been running into tomorrow. So overall, generally, it's been a very bullish year. I don't see anything stopping this at the moment. I think everyone is bullish, but again, if you're a trader going into tomorrow, you want to be patient and let your plan play out. Now, the key thing is, are we in a bubble? It's quite difficult to say, really, because you can't really time the top. I think when every indicators are pushing all-time high, and you can't really short in this market, really, but they everyone is trying to say something, but ultimately what you can do is you trade what is in front of you. Of course, you don't want to buy a fluff. I think few key things is that the bulk of the market, of the money in the market, is concentrated in a very few assets. That's number one. The market's been generally pushed by AI, or the market's been AI driven. Is this market the same as the 1999 bubble? There's quite some differences, but again, overall, this is not the time to rehash history. This is just here to say, look, based on tomorrow, work on your plan. Trade what's in front of you, not what you want to see, and see how it plays out, really. But until then, well, happy trading and stay safe. Take care. Bye bye.